special guest. We have the one and only Keith Gillard. Now, Keith is someone who has been so passionate about his mission in this life. The co-founder and CEO of Sustaero, making jet fuel from wood economically and at scale. Former Fortune 100 exec, founded, led, invested, and exited dozens of sustainability companies. And guys, you wouldn't even know he's a twice nominated Canadian Independent Music Award winner. So we're talking about business and all these things, and boom, look at that. You wouldn't have never thought. So yeah, welcome to the show. We really appreciate for having you on, and we can't wait to hear more of your story and how you got to where you are. A lot of people may see the end product, but they don't know the years and the sacrifice and the dedication that you went through to get where you are today. So thanks for coming on.
Oh, it's a pleasure. Sugira, thank you so much for having me.
No worries, no worries. So let's take it back to the beginning. Actually, like, even when I talk about Sustaero and what you do, like if I'm an 11-year-old, I don't know what that means. So how would you explain it even to an 11-year-old in what you do?
Well, this is why I try to boil it down really simply. We make jet fuel out of wood. Um, it's of course more complicated than that, but that's the simplest to boil it down to. We have licensed the world's only TRL9, which means fully commercial, bankable, insured, investable, everything technology for to literally rip all of the atoms in the wood apart, and then that's turned into what's called a syngas, a synthetic gas, which we then remove any minerals that maybe the tree pulled up with water from its roots. Iron or sulfur is particularly important. We have to remove it from there. But these are very, very small quantities. Basically, the tree is carbon, oxygen, and hydrogen, and very predictable. We're using wood waste, not actual raw trees. We're using the residual products from sawmills.
Marketing is all about storytelling. Dad, when we first started this business, what did you say to me?
I said, yes, we do a podcast.
Why?
Because I want to tell our story.
Why?
Because I know the story builds a legacy.
Builds a legacy. And that is exactly what we do here at ETS Rubasha Media. We market your story on social media so you could build a legacy for those who come after you, to build your business and your personal brand.
Yeah, follow us on our platform. Go on our website, etsrubashamedia.com.
This is about legacy, and it is about showing up on social media every single day, because if you don't show up, your competition will.
Wood chips and shavings that previously were supplied into pulp and paper mills. But with the collapse of the paper industry in Canada, there are 120 shuttered paper mills. And that is part of our strategy, is to set up this process on those former mills, accepting the exact same inputs that used to be supplied there, usually from the exact same providers, because they don't have other customers for those things. And then we feed them into this gasifier, rip them apart into the individual atoms, scrub it down for anything that we don't want in there, and then we use a process that's called Fischer-Tropsch that stitches those atoms together into these lovely long chain waxes, which are like a bio-crude, like crude oil that comes up out of the earth. We make it synthetically, and then just like crude oil is refined to become jet fuel or diesel or gasoline, we refine that in exactly the same way that they do in the petroleum industry to come up with the kerosene, which is jet fuel. Jet fuel is kerosene. We make the kerosene from that. It is chemically identical to what is in a jet right now, except we make it sustainably from forest waste.
Okay, so like, who are your customers? Who are your clients?
So we're new. To speak in the present tense is to say that there are no customers yet. Our first plant will be built and operational at the beginning of 2029. Now, we are in talks with many interested customers, And the customers there are the airlines, both Canadian as well as international airlines. And the reason why they are so interested in this, well, maybe it's driven by their interest in sustainability, and maybe not, because the governments of the world are increasingly requiring that any aircraft has to have a certain percentage of sustainable fuel in their tank. Otherwise, they face incredible penalties and they risk losing their routes to groups like, for example, out of Europe, KLM and Air France, or the International Airline Group, who is the number one purchaser of sustainable fuel, will take over the routes from anybody that is unable to source and put this fuel into their tanks.
Mm. Wow. And so can we go back a little bit, and you've gone through exits. Can we talk about that? Like what was that like? What company was that for, and what was your role in that?
Oh, sure. Yeah, I've been through several. I did 25 years in venture capital, so dozens of companies. I've been through really great exits in terms of acquisitions by major strategic corporates. I've also been through I've been through IPOs as well that were successful, where we made very large multiple on the money. There was one that we just did in 2021 that went public within 6 months of the investment to 10 times the value of what we put into it. And in this case, we were fortunate enough that we did not have a lockup period, so we were able to sell our shares during that very high peak of hype for that company. I've also invested in companies that we had a lockup during the after the IPO, and we could not sell for a year until after the IPO. So we missed out on that initial wave of hype. Still made good money on all of those that I've exited, and right now one that's getting a lot of attention is D-Wave. D-Wave we were unable to sell during that peak of intense interest, and then the share price collapsed, and I chose to just hold on because I really was a big believer in the value of the company. And then in the last 2 years, it's been one of the strongest performers on any stock market. It went up 11 times in value last year, and it's up another threefold so far this year. So it's performing very well. So sometimes, often actually, you have to take a long-term view towards these things. Venture capital is not a get-rich-quick kind of business. It's a game for the patient.
So again, if I'm an 11-year-old, what is venture capital?
Venture capital is an investment class that takes usually minority stakes in private companies. These are high-risk companies, often, but not always, associated with technology and or new markets. And so venture is a high-risk, high-return proposition. The majority of venture investments fail to return the capital that went into them. And for that reason, anybody interested in that should always have some path to see that an investment can result in a 10 times return on their money. And they should take a portfolio approach. To invest in one company alone is a very, very high chance that you will just lose your money. But invest in 10 companies, there's a better chance that you have one or two in there that will return 10 times its money. And so the ones you lose your money on will become less consequential to you overall because the basket of companies performed well.
Okay, so if I'm getting what you're saying, me and my friends come together and we say, okay, cool, we want to buy some companies. And if we buy some companies, like we buy them and they're at high risk, so they've maybe not been doing well in the technology, and we can go in there, turn it around, increase its profits, so then we have more money than we invested in.
Yeah, well, it's a private company, right? So there's no liquidity. You have to wait for an exit. Usually it doesn't normally go 10 times in 6 months like the deal that I did in 2021. Usually it's 5 or more years between the investment and the point at which the company either gets acquired or goes public. Either one of those are liquidity events. There are other kinds of exits that are not as good, but might be the best option available to a company, like a management buyout, where the managers of the company buy out their investors. Typically, the best an investor can expect in that situation is to make their money back. It's very rare that they make a positive return in that situation. But I'd rather make my money back than lose all my money. So if the situation called for it, I would certainly accept such a deal. And then the worst kind of exit, of course, is bankruptcy and the shutdown of a company, in which case you lose usually all or sometimes most of your money.
So you said most venture capitals fail. They don't get their capital back. Why is that? Why do you think that is?
It's because you're dealing with very risky things here. And in my experience, it's never been the technology that fails. The technology generally works or is made to work. You have to, there's always problems and challenges to overcome. But the reason why companies fail is, in my experience, never the technology. The companies that didn't have good technology didn't get funded in the first place. It's always people. It's the management of the company. Do they have the required experience, the knowledge base? Do they have the network to bring in the investors, the partners, the customers that's required here? Do they have the judgment to have developed the right product with product market fit that appeals to customers, and do they judge the timing on the market correctly? When I was president of BASF Venture Capital, we had one company, and I still have a book on my bookshelf behind me from it, that did individual DNA sequencing and then advised you on nutrition and fitness. And amazing product. And unfortunately, years ahead of its time. The market was not ready to do that. We weren't yet in a position like we are, where people right now are very happy to swab their cheek for Ancestry.com or any of these other kinds of services. And so the company, whose name was Siona, we ended up having to sell it for enough money to clear its debt. And, these kinds of decisions are heartbreaking, but they can become necessary when it becomes clear that nobody will put up the cash to get a company through the years before the market is ready for them. It can be the smartest, even though difficult, decision to shut the company down. And that's what we had to do in that case.
So, what would you say? What's the difference between venture capital, and private equity?
Venture capital is focused on those risky companies. They may or may not have revenue. They're a lot less risky if they have revenue. I will look at commercial revenue as being one key indicator of de-risking. Whereas private equity is usually coming into a company that is usually acquiring a company that is already profitable and is mature, has existed for years. So with my company, Upper Stage Capital, we were focused on acquisition in the lower middle market. So the middle market lower middle market goes between 1 and 10 million of EBITDA, earnings before interest, taxes, depreciation, and amortization. Um, and we played a little shy of those goalposts. We looked at 2 to 8 million of EBITDA in that company. So we would look for these profitable companies that perhaps were being run by baby boomers looking to retire, and that did not have a clear succession plan. And then we would make offers to buy those companies. The most of private equity is in the later stages. We played in the lower middle market because it's very unpopulated. The middle market goes from 10 to 100 million and in EBITDA, and then 100 million and up is a upper market, and that is where the vast majority of private equity is being invested, is in the buyout of really quite stable and profitable companies, and then through a variety of strategies, increase their value either by improving their profitability, by diversifying or sharpening their product offering, or by acquiring multiple companies and then putting them together to create something whose sum is greater than the sum of its parts.
That is very, very fascinating. So you're saying in private equity, most of them compete or in the upper market of the huge, huge companies and not enough in the because even a small business range is from 1 to 50 million, but you're saying from 1 to 100 million. Is that the mid market that's really unpopulated? Those plumbing services, the boring businesses. Is that what you're referring to?
Yeah,
That
yeah, exactly. The so-called boring businesses, but they are money makers, and there's really a succession crisis. The vast majority of all small and medium businesses in North America, and I think these statistics probably hold true outside of North America, but certainly in the U.S. and Canada, it's published. They are looking to exit in this next decade, and less than half of them have a plan. Even in the case of family businesses, only 1 out of 5 have a next generation that wants to take over the business. In most cases, the kids, they're not interested in mom's company. They want to go and do their own thing.
so what opportunity do you see in that now?
Oh, I think the lower middle market is an incredible opportunity. I'm a venture partner at Pioneera Ventures, which, despite the name Ventures in the title, is a private equity firm doing buyout of lower middle market manufacturing companies. Essentially, the many aspects of the investment thesis that we developed for Upper Stage, they are executing on there. Now that I'm doing Sustaero, I don't have I don't have any extra time to focus on the kinds of deals I was doing at Upper Stage, and so my good friends at Pioneer Ventures are the ones executing on those deals.
Okay, so you're in this, you're a partner in this venture capital firm, and then like all those deals, you just do they give you a report or something, or do they just say, "Hey, we're doing this. This is what's happening." Is that how you're kind of playing it because you're just so busy with time?
Yeah, as a venture partner, I'm not fully involved in there. I provide them with deals, and if they execute on the deals, then I'll have some stake in them. But essentially, I would like those deals to be done, and I'd like them to be done by people that I respect and am confident in. And certainly, that's the case with Pioneer Ventures.
So I want to talk about how you did yours within 6 months, but you said something like venture capital is a long-term game. So would you also say private equity and venture capital are both a long-term game? Um,
They
and
are. Oh, please go ahead.
no, 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 I was just thinking like because when I think of private equity, I think what comes to my mind is like, okay, we want to buy some businesses and scale as quick as we can. So if we, we invested 5 million into this or whatever, we bought it, and we can, because we can improve the systems and automate the business, whatever, we can now push it up to 90 million, 80 million, and we take our thing. But you're saying, so I'm just intrigued in terms of the long term game and how that works.
Yeah, private equity can move much faster than venture capital for the reasons that you just stated. Uh, If um, if the new owner of a company is able to increase its value, increase its attractiveness to acquirers, or to make it a feasible public company, then they could move very quickly to realize an exit from that investment. Whereas with venture capital, you're developing new products, often based around new technologies that just take some years to scale. In the case of the one that was for 6 months, in that case, very unusually for me, it was a software deal. I've only done a couple of software deals in my career. And this one moved very quickly, and we took it public with a big celebrity investor getting involved, which created a lot of attention to the stock. And there was an amazing opportunity to get out quickly. I subsequently reinvested into the company after I realized my initial exit and the share value fell. I bought back in at the lower level, and I'm still a keen supporter of what they're doing.
Hmm. Wow, it's very fascinating. And you said something earlier. You said what a lot get wrong when they invest into companies or within companies is the management and the people. So how does like a CEO, and this is interesting because like even if you are in private equity, you'd come in and make sure the management is good, or you bring in the right management. So like, um, how does one have a great team, a great structure, and a team that's aligned on the goal, and that's very attractive for acquirers, but also for the CEOs who are running the businesses themselves to have that if they also want that exit as well.
Yeah, it's people that make things succeed or fail. So you're absolutely right. That is the number one thing to focus on. This is where an experienced manager, whether you're talking venture capital or private equity, or just an operator who has built and run businesses before, and maybe this is their first time in the private equity space, this is where that knowledge, expertise, and network come to bear. So, for Upper Stage, I partnered with Frank Christians, who was a lifelong operator who had built up multiple companies and had sold multiple companies, and he had such a network of people to bring in to help run everything from manufacturing to sales to administration, and had contacts all over the world. He had worked on most every continent. He had managed companies in not in Africa, but he had in Europe, in Asia, in South America, North America, and even in Australia. So he had that experience in that network to bring people in there. My own background with BASF or Mitsubishi or the 25 major strategics that were the LPs in my previous fund, those are groups that I'm happy to always be sharing information with, and where they're able to help me find the right people or partners, whether it's within their organizations or people that they know, to accelerate what we're doing. That is helping a lot in Sustaero, because I have dealt with these technology providers before, and because I have dealt with airlines. It's very, very helpful. I understand how they think, how they work, and I already have some contacts to start to go from.
Wow. And it's amazing with your experience and what you've been able to do. So when it comes to venture capital and private equity, how do you guys find deals? How, it's kind of similar to in our business, client acquisition, right? How do we get clients, customers? How do you guys find deals and the
Well, I'm
right
not doing that anymore
yeah,
because Sustaero is taking all my time.
time? Yeah.
However, until about a year ago, when the Sustaero idea really started to grow, um, there is a huge network. I did 25 years in VC and PE. Even today, every morning, my inbox is filled with deals. Private equity the deals tend to be shopped by an investment bank. However, there is still the value of that, your personal network. And that tends to be where a lot of the best deals come from, through people that you know, people, a guy who knows a guy. Those tend to be very interesting deals, where they're not being broadly shopped. They come to you specifically because you have an expertise. They trust you. They are confident in your ability to grow the value of the business. That's a lot better than an investment banker who's sending out emails to all 10,000 potential investors on their distribution list.
Wow. And so what would you say is the next mission for Sistera? What do you see? What's happening with, in the marketplace?
Well, for Sustaero, so we are acquiring sites, former pulp and paper mills. Canada is our focus. We have been offered sites in other countries in the USA. Just earlier this week, Puerto Rico, very interesting site, as well as Southeast Asia. So we're looking at those as geographic expansion areas for us, with partners in a lot of those areas. For Canada, though, we have mills that we really like, in Nova Scotia, Ontario, and British Columbia. Those are our favorite sites. So we are working to acquire sites and acquire long-term supply agreements for the electricity and the biomass, the wood that we need, as well as water. Although our water needs are quite modest by industrial standards, those are the three inputs we need to make what we make. And then in parallel with that, the off-take agreements. So these are the agreements with the airlines to buy 10 years or even more. When I was speaking at the SAF Congress in Houston last week, I met with one major Asian airline with whom we've been dealing for a few months, and they brought up expanding to a 15-year offtake agreement, and I've also heard of even 20-year offtake agreements being signed. So we're working to put those in place. An exciting step of that, I cannot name this person yet, but we have attracted a really incredible chief commercialization officer to the organization. This person ran jet fuel sales for an oil major for a decade and was also a manager with a major airline for a decade. So really remarkable addition to our team. So that's what's up for us for the next few months.
Wow, and I can see obviously it's taken so much of your time, which I wanted to talk about a little bit before we end off your keynote speaking career. How did you get into becoming a keynote speaker? I know also that's something that you enjoy doing. Yeah, how did you get on that path, especially within obviously the airline industry?
Yeah, well, I've always been very comfortable on a stage, as a child, as a musician or an actor. Very comfortable. I won this public speaking competitions beyond my school into the Western Canadian region when I was when I was in junior high and continued that in high school. So I've always been very comfortable speaking in front of a group of people. It's never been a problem for me. And I like to think that I have that I'm very trustworthy and a touched with humor style of delivering information that people find informative and entertaining. So I think this is why it's led to me being asked to do more and more of these things. I am delivering a keynote at the Alternative Fuels and Chemicals Coalition in Washington, D.C. next month. I have I've an increasing number of requests for me to come and speak, and I'm very happy to do that because I'm very proud of what we're doing, the impact on the environment and as well as on society of what we're doing. I think it should be more broadly known, and I think I'm a good person to tell the story.
Wow. And when it comes to keynote speaking, what advice would you give other CEOs out there who want to be able to continue to get their mission and vision out there, especially when you're dealing with one-to-many and the deal flow that can also come from that as well?
Keep your energy up. There's nothing that loses an audience faster than somebody who can't get their energy up to that next level, who can't put emotion into what they're doing. Um, you know, if the speaker doesn't appear to be moved by their own words, why should the audience be moved by them? So I would say work on that. Video yourself. Look at your video critically, and I know that can be very difficult for some people until you get used to it. But really look at your video and see what you're doing. Are you, maybe you're not aware that you fidget in a particular way. Maybe you're not aware that you're becoming monotone, or that you take strange pauses, or that you say a lot more than you figured you did. All of these things can help with video. Uh, and there I go. I just said myself. There's now interesting software. Read AI, for example, I use, and it's in my meetings. It is in my meetings, and it gives me a critique of how I speak. It tells me what percentage of unimportant connecting words like that are used in my speech, and I can see myself over time improving. So tools like that can also help somebody to become a really clear speaker, and without necessarily risking any embarrassment, because it's just a computer listening to you, or you watching your own video.
Wow. Yeah, I love it. And it's feedback. It's improving. It's being obsessed with your craft and always getting better. Before we leave, I always like to do something where I'll like say a word and then you whatever comes to the top of your mind, you can say in one word. So, for example, if I say, what does clean tech mean to you in one word, you would just give a response. And then if I'm curious, I'd ask you to explain further. Okay?
Okay,
So, Sustero.
one word, eh? Blue sky. That's two words. Put them together.
And now you can explain why that.
Oh, a blue sky opportunity is a clear opportunity where you're uncluttered as well. It implies clean, pollution-free air, because what we're doing pulls more carbon out of the atmosphere than it puts back into the atmosphere. By burning the fuel, we are contributing to blue skies and easy breathing and comfortable temperatures worldwide for everybody.
Nice. I love it. Advisor.
Wisdom.
Mm. Can you explain on that one? I like that.
Well, an advisor is going to bring you the benefit of experience that you don't have. And this can be borrowed wisdom. You can stand on the shoulders of giants, i.e., your advisors, by benefiting from all the mistakes that they made. And you're going to make your own mistakes. Mistakes actually are really important, and you shouldn't be filled with shame for having made them. But an advisor can help you avoid many of them. So tap into that wisdom.
Wow, I really love that. That's an amazing answer, and it's very, very true. Okay, the next one, CEO.
Vision.
Explain.
The CEO really has three jobs, but it starts with vision. The vision for what can be made, especially a founding CEO. You have to have a vision for making something out of nothing, and how to get there. So without that vision, you are living only moment to moment. You're reacting. So if you do e-commerce, for example, that may be sufficient. You're just reacting to customer inquiries, and you may not have any vision. You're just responding to what people want. And certainly, there's a lot of people that make money with that. But Steve Jobs, for example, said that the customer doesn't know what they want. I know what they want, because he had a vision for it. And he was right, right? Like, it's how we got these. That's how we got the iPod before that. It's how we got to the AirBuds that have become so very popular, and the differences that those products were all related to things that were on the market, but they were different. They were packaged differently, had a very different user experience, and it was not driven by customer demand saying, we want this. Instead, Steve Jobs showed them the way. So he had the vision as a CEO. And I think that all the great CEOs have their own vision.
When you talk about, like, you gave the example of e-commerce and vision, what would your comment be on like Jeff Bezos with Amazon? Because that's an e-commerce method, but was that the vision to create something that was never like that? Is that also what you mean when you say vision?
That's
Get
correct.
to the
Yeah, yeah.
e-commerce model.
He had a vision he wasn't the very first mover, but he was among the first movers to do that. And he had the brilliant idea to focus initially on books that have no shelf life, that are easy to ship, difficult to damage, and where he's able to, carry a large number of SKUs in a manageable way. So he had the vision to focus on the right initial market segment, and bring that. A lot of people live in communities where they don't have a big bookstore. They may not have any bookstore at all, and he opened a whole world of books up to people no matter where they lived, and that was smart. And then from there, he had the vision to expand, and now they sell almost everything.
Okay. Last word, if I say the word private equity, what does that mean to you?
Leverage.
Ooh, explain.
Private equity uses all kinds of leverage, the obvious one being financial leverage. Use debt to buy companies in a leveraged buyout. This can mean that with a relatively small amount of money, a PE firm can buy a larger company with the bank carrying the rest of it. So that's the financial leverage. But also, a good PE investor is levering their own network and experience to bring people in to sharpen the product focus of a company, or the vision to bring together multiple companies and roll them up into one synergistic, greater than sum of its parts organization. All of
So
that is different kinds of leverage.
that leverage, even on the financial side. So you're saying they can come with a smaller amount of money. You can go to the bank and borrow that, because they also use the profits of the business, the cash flow of the business, to show this is what it's worth, the valuation, this is how they pay back. And then the bank gives them the money, then they go in and scale it even more by leveraging who they know, and boom, 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 within a few years, then exit of
That's
what.
correct. Yeah.
Awesome, awesome. Anyway, Keith, this was amazing. I really, really enjoyed it. And just to be able to learn from you. Really appreciate it. Is there any kind of message you want to leave the audience? Anything that you have in your heart that you want to share?
Well, thanks very much. I would say, clean tech, this was your example word, but this is doing more with less. And a lot of people think about it only in terms of energy, maybe battery technology or solar or this kind of thing. But clean tech is anything that allows us to do more with less. It is not about doing less. It's not about becoming less. It's not about going back to some medieval feudal society. This is about advancing the human race into the future in a sustainable way so that we do not run out of resources. We continue to grow, doing more with less. Sustaero is a key part of that. People are not going to fly less. People are going to fly more. We need to make sure that that can continue and to heal rather than damage our environment. And that's what we do.
Love it. Thank you so much. And for people who want to get in touch with you, we'll put your details down in the description. And this has been on LinkedIn. So yeah, thanks very much and have a wonderful day.